Hey traders, Mike Sir here. Welcome back to part 4 of the 4-part video series where I teach you how to make money from trading cryptocurrencies. In part 1, I introduce you to the world of derivative trading and the various types of crypto derivatives that you can trade. In part 2, I showed you how to trade Bitcoin futures contracts and a simple trading strategy. In part 3, I showed you how to trade Bitcoin options contracts and another simple trading strategy. Now, if you haven't watched part 1 to part 3 yet, please watch those 3 videos first, as it will give you a good overall understanding of how these trading instruments work. Now, for those who have watched part 2 and part 3, I shared with you 2 trading strategies using Bitcoin futures and Bitcoin options that have made a very nice profit, as much as 1,584% so far. Now, besides these extraordinary gains, in this video, I'm going to show you the simplest way to make money in cryptocurrencies, particularly in Bitcoin. Now, please make sure that you stick to the end of the video, as I'm going to show you the profit that we made trading Bitcoin futures and Bitcoin options. So let's get started. First off, let me talk about the overall cryptocurrency market and the Bitcoin price in general. Since Bitcoin was created in 2009 by Satoshi Nakamoto, the price of one Bitcoin has risen in value from just under a fraction of a penny to a record high of over $68,000 USD in 2021. Now, as a comparison, the entire cryptocurrency market has risen from a virtually non-existent market to a total market capitalization as high as over $3 trillion, with Bitcoin accounting for almost 1/3 of the total market cap. Now, the bottom line is anyone who has invested in Bitcoin or any other popular cryptocurrency early has done extremely well. However, the cryptocurrency market is extremely volatile and has undergone several market crashes. For example, the first major crash of Bitcoin was in June 2011, when it reached $29.60, only to see it fall to under $2.05 by November 2011. Also in April 2012, it reached another peak to $230, but only to see it fall to $68.50 in only 3 months. Then a few months later, prices spiked up to $1,237, but fell to $315 at the start of 2015. However, it was in 2017 when Bitcoin really went mainstream and hit a high of almost $20,000. Now, this led to a gold rush of other coin enthusiasts developing other coins and growing the entire crypto market. However, all the hype and euphoria didn't last, as Bitcoin prices fell to $4,000 by March 2020 at the peak of the COVID pandemic. Now, as you can see, one simple long-term way to make money from Bitcoin is to buy it whenever there is a crypto market crash. And since Bitcoin went mainstream, this has been a very profitable strategy. As an increasingly popular asset class, Bitcoin continues to evolve along with the factors that influence its prices. Now, with growing interest from large financial institutions, Bitcoin has provided a way for investors to store value, hedge against inflation and market uncertainty, and allow anyone to gain exposure to cryptocurrency within their investment portfolios. Now, as Bitcoin and other cryptocurrencies become more involved in our daily lives, the price fluctuations and volatility will probably lessen and perhaps stabilize like a blue chip stock or stable currency at some time in the near future. Before I share with you the trading profits that we generated utilizing Bitcoin futures, as discussed in part 2 of this video series, I want to let you all know that this video series is sponsored by Delta Exchange. Now, they built one of the most liquid and trusted global currency derivative exchanges, run by the founders who bring expertise across financial markets, derivative trading, product and engineering from companies including Citigroup, UBS, and Hotstar. Now, they're well financed by investors such as AAVE, CoinFund, and Kyber Network. They have an incredibly comprehensive product offering with more than 100 crypto derivatives to choose from and are number 2 in crypto options trading volume globally. Now, they're currently offering a special promotion for only my viewers. So if you sign up for an account today, you'll receive a 10% discount off any trading fees. In addition, try options trading on the Delta Markets platform and get up to $100 cash back on your first options purchase. Please click on the link in the description box below to sign up for an account and start trading today. Okay, back to the video. Now let me show you the trading profit that we made on trading Bitcoin futures. And again, if you want a detailed explanation of the Bitcoin future strategy, please click on the top right-hand corner to watch part 2. As I showed you, we utilize a breakout trading strategy to trade Bitcoin, and we're looking to buy Bitcoin once it broke through a strong level of price resistance at $40,000. Now we were waiting for the Bitcoin price to stabilize first, and then once the price established a narrow price range, then we placed a buy stop order at $40,000 and $100. Then if the price can't go higher, then we placed a stop loss order below the now support line around $39,900. So basically we were risking $200 per Bitcoin. Now due to the tight stop loss price, remember what I said in part 2 of this video series, that we expect to get stopped out at least 2 to 3 times. Now, as I'm recording this video, the current Bitcoin price is at $46,837 and has gone up $6,737 from our initial entry price of $40,100, an increase of 16.8%. Not too bad. But in this case, if we take a closer look at a shorter time frame chart, the Bitcoin price did not go straight up, and in fact, we had actually gotten stopped out 2 times on our trades before it worked out. Now the first time, the price shot up as high as $41,752 before falling back to as low as $38,800. The second time that we tried, it went as high as $41,165 before falling back to $39,308. However, the third time that we tried, it never went lower than our stop loss price of $39,900. So let's now calculate our profits on our Bitcoin futures contracts. Now we essentially made $6,737 per futures contract, and let's subtract the 2 times that we got stopped out, which was $200 each, or $400 in total, and our net profit is $6,337. Now because the Bitcoin futures contract only requires 1% margin, we only needed $401 of capital to make essentially $6,337 in profits, and over 1,584% profit, or over 15 times the return on our capital. And this is really the power of trading Bitcoin futures contracts. Before I share with you the trading profits that we generated utilizing Bitcoin options, as discussed in part 3 of this video series, please take a moment to like this video, hit that subscribe button if you haven't already, and hit the notification bell to be alerted when I upload new videos on the crypto market. Okay, let me show you the trading profit that we made on trading Bitcoin options. Again, if you want a detailed explanation of the Bitcoin option strategy, please click on the top right-hand corner to watch part 3. As I showed you, we traded Bitcoin options utilizing a simple strategy called trend trading. Now we saw that the Bitcoin price was trending up and the Bitcoin price was right at the uptrend support line, so we bought call option contracts. Now at the time, the Bitcoin price was at $38,630, so we bought call option contracts at the strike price of $40,000 with an expiration date of April 29th, 2022. Now this cost us $2,033 per 1 Bitcoin contract at that time. Now, as I'm recording this video, the current Bitcoin price is at $46,837 and essentially has gone up $8,207, an increase of 21%. However, the Bitcoin options contract has done even better. The contract has now gone up to $7,772, an increase in premiums of $5,739 per Bitcoin contract, or an increase of over 282% so far. And as I mentioned, this is the power of trading Bitcoin options contracts. As I've shown you two different profitable Bitcoin trading strategies, as well as utilizing two different types of Bitcoin derivative contracts that have made us a lot of profits, for those looking for a simple trading strategy, I'm going to teach you a strategy called dollar cost averaging. It's a simple strategy where you divide up the total amount that you want to put into Bitcoin and periodically purchase Bitcoin as prices head lower. So basically, instead of buying your entire position in Bitcoin at one set price, you buy it bit by bit as prices go lower, which has the benefit of you not having to be too accurate in terms of your entry prices. And if prices do head lower, you average down the cost base of your purchase price. Now, as we've seen, even though Bitcoin prices are extremely volatile, the overall price trend of Bitcoin is still up. But please be careful that the dollar cost averaging strategy doesn't work in an overall down market. So for example, if you bought some altcoins like Dogecoin, they may never come back up due to their lack of value. Thanks for watching part 4 of the 4-part video series of how to make money trading cryptocurrencies. I hope you enjoyed the video series as much as I did in creating them. If you are interested in working with me one-on-one for me to help you in trading cryptocurrencies, please go to my website at Active Traders Academy to apply to work with me. I'll see you all in the next video.